All right, let's see. Okay, testing. All right. All right, testing. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thank you so much for taking time out of your day to join me this morning and every morning, 9 a.m. Eastern Standard Time here on the YouTube channel. Let's go ahead and get right to it. We have a lot to go over. Yesterday, minus 1,200 points in the Dow. My goodness, what a day. The CPI report basically nuked the S&P, but got us to levels not seen since, where are we now? Pretty much levels not seen since 9/8, which is, I get the date exactly. Since last Thursday. We've been levels not seen since last Thursday because we had this incredible run up towards the tail end of the week. And then now we're back to where we were on Thursday. So I guess a little bit of a fantastic voyage of a round trip to Thursday. So if you're here, you're probably thinking to yourself, certainty. What's next? Right? And understand that when it comes to trading, it deals in probability. And it's been actually tough sledding here. It's not easy to get on the video and talk about the market when it's been just absolutely all over the place. You had a bear trap to a bull trap, and now we're back to Thursday, 9:30 in the morning. And that's where it gets extremely frustrating. Obviously, I know I am because I've had some losses personally on my portfolio, but you have to keep pushing, and that's why we're here to do what we got to do to see what the next move is. Let's go over it. Dow futures up 51, Nasdaq up 40, S&P up 10, and Russell's pretty much flat, up 2 points. Treasury yields, we're going to go over that here in a second. 3.443 on a 10-year, 109.50 for the US dollar. That's down. That's a good sign. Again, the dollar index is the one telling us everything. That's the tail wagging the dog. The VIX is down 1% this morning. Gasoline futures up with dollar being down. Crude oil 87.90. Natural gas futures down up 0.17%. Gold futures are down even with the dollar being up, but with equities being up, that makes a lot of sense. Silver up 0.30%. Euro dollar still below parity, 99.98. 143.02 for the dollar yen. Talking about intervention by the Bank of Japan. Now we're throwing it back to 2011 when I used to track Forex. 143.02. Wow. Bitcoin taking a little bit of a bid this morning, very slightly above 20,000. 20,000 seems to be that line. If you guys remember, we talked about that entry at 18,300 on Bitcoin. We have tested that. We have bounced there. So granted, we are bouncing off lower levels in the sense, at least in the totality. 1582 for Ethereum futures this morning. Let's get to the charts together. S&P futures, pretty basic chart. We got some RSI here. Again, if you guys like looking at that, oversold here. Let's go to a 4-hour chart and see that oversold. Again, 38. Let's see the daily. There we go. Now we're at 43. Again, oversold, but not purely oversold. 70 and 30. 70 isn't overbought, 30 isn't oversold. Right on the side of oversold. Does that mean go around and buy everything? Let's go ahead and take it step by step. So let's go ahead and break it down as an investor, as a trader, and we're going to talk about as someone who's a market participant or a viewer. So we have three different types of buckets. Let's start with the market participant as a viewer. As someone who looks at this stuff every day, probably has a 401k or a brokerage account, but is not big into day trading, probably just does the dollar cost averaging, and they want to understand why the market's moving the way it is. So really all of this here, we know what it is. It's inflation. Now, if you're the Federal Reserve today, the real question you're asking yourself is, do we get criticized for going too hard or not hard enough? So Jay Powell is doing, and the Fed is doing what they can in order to tame inflation. But a lot of people are trying to use, or I've seen it and I've retweeted it, the 2008 analogy. Let's go over the two main factors in 2008 that I remember that you could research yourself that was different than now. Now, again, you may have the analogy in terms of the price action, but in terms of the macro and the backdrop, that's key. So we have two main factors in 2008 that were different. 2008, oil prices were above 140. That's number one. Number two, Lehman Brothers collapsed. Bear Stearns was bought out for pennies on the dollar. We had residential mortgages upside down. You remember all that craziness in terms of um, derivative trading and over leverage system, the whole nine. If you want to know more about this, I highly suggest to watch a great documentary on it called Inside Job. I don't know if they're on Netflix, but there are on Apple movies, and you can rent it. It's probably really cheap, like $2. I've owned the movie now for years because it's good to see the history of how we got there, and maybe we don't repeat it. But that's really the two main things of the 2008 analogy to now. Now, the 2008 analogy states that we're going to go ahead and fall some more. So let's go ahead and compare that chart. I retweeted it, so I'm going to get on Twitter right now and show you the exact move or the exact kind of analogy here. Let's see if I can find it. Here we go. Here is the S&P in 2008 compared to 2022. So again, you have the run up and everything. So again, it's a equal comparison. So again, we are looking at a September or October fall. That's based on the analogy. So with that being said, in 2008, do we expect that? I don't. I don't expect that leg down. What I do expect personally is the seasonality. So let's go ahead and get to seasonality on Twitter, the seasonality chart on Twitter. And I posted that on Instagram to show you guys that, there is an analogy that could work. The 2008, I don't think will be as connected, but I can still find it here. Let's see. I tweet so much. But again, it's information that you guys need. Where is it? The analogy, the analogy, the analogy. I know I had it. Let's see. So many tweets. My apologies on that. Let's see if we can find that seasonality approach. God, and I had it. There's so many pictures and stuff that I tweet that it's kind of a pain. And Instagram doesn't work on the phone, on the computer, at least that I can see. Here we go. Here's the analogy. This is the seasonality for the S&P, and you could see that we do get that drop here around mid-September. We should get a bounce, and then we'll get another flush. So let's say, for argument's sake, this is the exact analogy. What is the point in October that we get to where we start bouncing? That is really what you're looking at the end of the day. What I want to sell this rally, here is where I fucked up, and I'm going to say the word fucked up because I did. This trend line here showed me once we broke 3,900, I shorted at 38.83 and I got hit to the upside. Again, bear trap. And here, I didn't go long at all. But again, we fell. I tried to play a bounce, momentum bounce yesterday, didn't work. But now we're holding this trend line. So again, if you guys remember that megaphone formation from a month ago or two, that was pretty much on point. I think we kind of hold on to this trend line at least above 3,900 and then go ahead and maybe retest 4019. That's kind of the look I'm looking for. If we break 3,900 and again break the lows of 39.83, I'm only going to cross my fingers and say, please don't do this again to me because that hurt. Then I would target this 3,800. Do I think we get to the lows of 30, 36, 39? If the Fed raises 100 basis points, yes. I don't think they will. I think Nomura and who's the bond trader, Gunlock, is calling for 100 basis points hike. I don't think that happens. I think they go 75. It's 80% chance of a 75 point hike, and a 20% chance, or 20% chance and 20% chance of 100 basis points. So 80% chance of a 75, which I think we're going to get, and then we have the 20% chance of 100. Now 100 would be unprecedented. I don't think they get there, but it would be a really good bandage removal. Here's what I think they're setting up. In September, we have the actual Fed next week. If they do 75 basis points, I think we get a relief rally. Nothing crazy, but a nice relief rally where we just get back to where we were. It seems to be that level that we were kind of hovering around was around 4,100. I think that we can hover around there. By the end of the year, again, the low in terms of the analogy we talked about in October, I think that sounds right around 3,900. Could we break down a little more and maybe test the lows? Again, we need to get below that big orange line here of 3,900 and stay below it, close below it, not just, just tap it. And that's the problem now with the market, is that you're not getting to the point of you're seeing consistent momentum. You're getting just flashes of it here and there. couple of days, then we retrace. A couple of days, we retrace. It's like, 10 steps forward, 10 steps backwards. It's back and forth. And that's the frustrating part as a trader, is that you're trying to find at least some consistency of momentum. So in order to profit in this market, you either have to get it right first thing in the morning with a gap up or a gap down, or you're just riding momentum literally for the first couple of hours and getting the hell out, which is difficult as a scalper, obviously, but that's the reality that we're in. Now, let's go ahead and talk about now. We've talked about the investor talking about how the Fed is going to change things or increase rates. And we know that when the Fed becomes more constrictive with their monetary policy, equities are going to suffer because the dollar goes higher, bonds go higher. If I told you today, guys, that you can get a 1-year CD for 3% returns, 3% full return, guaranteed FDIC for a 12-month CD, we're not there yet. But if we did, that would change the mentality of a lot of investors and probably go to bonds. Bonds will be the first to be bought once the bottom is in. Understand that. So TLT, TNX, very, very key. Now, in terms of a trader, what are you looking for? You're looking for some kind of either resistance or support short term, because now you're just looking for turnarounds. You're looking for the best way for the next move to the opposite direction, because I posted on the other day the put call ratios and that we were not nearly at support. Now, again, now the put call ratios are probably a lot higher. More people are buying puts, and then it just keeps going back and forth, back and forth. That's what we seem to be getting. So, in terms of an investor long term, you're looking at the Fed saying, what's the rate going to be? Can I make some more money with bonds that are a little more secure? Again, you're chasing yield. If you're a trader, you're looking for complete reversals. You're just looking for some kind of reversal to catch quickly. And as an investor, someone who wants to buy stocks, you have your list of stocks that you want to buy. And there's really, if you didn't want to buy last Thursday, you pretty much don't want to buy today, because you're basically at last Thursday's level. So in terms of the panic view, the VIX being higher, again, we are only at last Thursday's levels, where I bought SPY-G last week. I mean, it is what it is, but basically flat on that position where I bought. So that's where we are. Let's go ahead and get quickly to the macro. Let's go to TNX. Let me remove this study, and we'll go ahead and go over some of the macro together. And then we'll answer some questions. How about this? TNX, 10-year yield, right near resistance, 34.83. Could that reject? The question is, if it does reject, equities will go higher. Let's go to the volatility index. Again, this trend line here, we still have a gap to fill to the downside. That might be filled when the Fed announces, if we do, 75 basis point hike instead of 100. Maybe that causes some kind of snapback bull rally. Short term, could happen. 28 seems to be that resistance on the hourly. Let's put an alert there right around 21 and a quarter. If we get that breakout, then we're going to head lower, period. The volatility index is telling you that. But again, you see that nice trend line to the upside. We've broken it before. That was the bear trap. And now we have a gap to fill to the downside with a 28 resistance. Let's go to crude oil. Crude oil is still between 90 and 85. Nothing has really changed there. Let's go to the dollar, a really important one. The dollar is still above 109.50 or 109.40, that trend line there. And again, the trend line that I showed you guys, it's been the same one. You could see that. Let me go ahead and remove this drawing here. We'll remove this drawing here. Okay, there you go. And you could see, based on a multi-decade chart, how that trend line has been holding up. We get a little bit of wick of above, but we could reject. And if we do, guys, equities will go higher. So again, call me ultra bull, but I'm skewed to the upside here, especially after a 1,200 point day on the Dow. Again, I'm looking for a turnaround. I want to catch something quickly. It's been a rough patch of the past 7 or 8 days. But again, we have to keep pushing. This is what it is. And it's not easy to do this every day. But we're going to come to work and we're going to push harder and get better for it. Let's answer some questions. Good morning, sir. Tough 4 weeks, 2 weeks of the team, but I'm sticking with you guys. Just like I spoke about, Connor, it's been an absolute shit show. And again, I'm the first one. I'll be the first one to get on camera and hit me with it. Hit me as a punching bag. And if you've been following us for, now the company's been open 8 years in October. If you've been with us for the past 8 years, since 2014, this is nothing new. This is what it is. We have been through elections. We have been through COVID. We have been through Fed rate hikes. We've been through Brexit. Brexit was fun. So there's always something that's going to end the world. I mean, there's always something that says, it's over now, Carlos. We're going to go to zero. And I've heard that so many times. So I apologize for being a little callous to some of the bears that say that, oh, the world's going to end, because I've heard it for so long and we always recover. 2020, I remember doing an investment club video with you guys talking about the world wasn't going to end. And we ended up okay. Guys, this is what it is. You get these kind of weird weeks, but this is what makes you appreciate the good times. Bad times always wake you up to the good stuff you were missing. But Conrad, I appreciate you guys sticking with us. I'm going to make you proud, and we're rocking with you. I'm with you every day with it, man. Watching this every day. Morning, boss. Thoughts on PPI? PPI came in softer than expected. Let's go over that number. Thank you for reminding me. There was so much to talk about. Need to go. Let's see here. Twilio is announcing they're firing about 11% of its workforce. One more thing I want to say about the Fed. The Fed is either going to raise rates until something breaks. What's going to break? Inflation or jobs or employment? People are still working, but we're seeing a lot of layoffs. And Jim Cramer made a good point yesterday. And again, I'm a fan of Jim Cramer. I like him a lot, regardless of what people may think of him. I think he's great because he's upfront. He's there every day doing his thing. And that's not easy. It's easy to hide behind a computer and a screen with, a Roman picture talking about the world's going to end or criticizing others. But to be on TV, to explain himself, even when they're wrong, to me, it's very admirable. That's something that I like in people, that, they take ownership. And Jim Cramer does. I really do believe that he does. And that's why I like watching him and hearing him speak. And he made a good point about the CPI number yesterday. He said that the cutoff point of the CPI may have skewed the numbers. That's the next CPI number may be better. But back to PPI, let's answer it. PPI came in softer than expected, 0.1%, or actually met expectations. The core PPI, month over month, this is stripping out food and energy, was up by 0.1%. The year over year CPI was softer than expected, 8.7%, and the core CPI, again, still elevated. So, I mean, the question is, are you really going to sell after a 1,200 point move to the downside? Doesn't mean that we can't go lower, but again, would you want to? So, if you're looking at this chart, are you looking to buy or sell? And right now, it's really neutral. Unless we start breaking down below 3,900, really can't do much here. And if you break above 4,000, that might be the green light to get you ahead. So those are kind of the numbers. It seems to be that round number effect, round number theory, 3,993, 4,000 to 3,900, 100 point, 100 handle difference there. Also, do you think we go to 75 bips then 1550 to end the year, or do you think more rate hikes in 2022? So here's my thought, William. I think that we get 75 in September. I think we get 50 in November. December, there's no meeting. October, there's no meeting. So remember, those two don't have any. We should hit the end, at least in terms of the high cycle or high rate hikes, right around March. That seems to be the price in. And then we have traders pricing in rate cuts in 2023, expecting a recession. Technically, we are in one with that GDP number. So again, I don't know what these traders are seeing in terms of why would we cut rates in 2023. I don't know what their catalyst is, but that's at least what's priced in. I still think 75 basis points is going to be the hike. I think we get that talk of 100, but they'll do 75. The market will cheer and say they're not that aggressive, and then we'll get 50 in November as the inflation data, as long as energy stays lower. And again, we had some news in terms of Russia and Ukraine. Imagine if we get a peace deal there. Could be. There's a lot of news out there that a lot of dissenters in terms of the Kremlin and the counteroffensive by the Ukrainians. Granted, this is politics stuff. Again, it matters, but again, let's not put too much emphasis on it. But if we get some kind of peace deal, you're gonna soar. You're gonna soar, and then imagine right in winter time for Europe, Euro's gonna soar. These companies that were being down are probably do well. But again, that's a pretty binary event to put that much faith in. We're gonna put faith in two countries to boost our portfolio. But again, it's a catalyst. We may see. But I think we get two more rate hikes. We'll get the next week 75, and November we'll get 50. Just my call. What is SPY-G? SPY-G is the S&P 500 growth ETF. It's focused on growth, so a lot of tech companies. That's one of my larger positions because I like ETFs, especially anything with the S&P. Now you could just buy S&P, SPY. You could buy VOO. You could buy SPY-D, which is a dividend-focused ETF. And there's also an S&P that are equal weighted. So you have value equal to growth, where you have what's called RSP, which is the actual equal weight S&P. It's not skewed based on market cap. That's one that a lot of investors like as well, because Apple, Microsoft, Amazon, Tesla, Nvidia, those guys skew the S&P because they're so heavily weighted. Anything you're looking to buy outside your normal purchases? If not, what level are you looking for long-term purchases? If there's anything that I wanted to buy that's, I guess, something that I don't own, that's a tough one. There's not something that stands out to me. The one that stood out to me when I bought that was different was Target. And Target, I forget where we bought it. We had that big collapse. I think it was right around like 140, 138 on that. And we've been holding it. I like Target long term. My wife spends enough money at Target. I might as well be a shareholder at this point. But again, you do have a gap to fill at 208.88. That would probably be my first target, take profit target. That's what I'm looking for. That may not happen this year, which is fine. But really, in terms of any stock that I'm looking for that I want to add more position to, there's not really any that seems that enticing. CVX is the last one I bought. And again, I still have a target of 173.60. Even with crude oil right around 90 and 85, Chevron is doing fine. And that's a stock that I want to own long term. Thoughts on Google chart? Google had an alert broken for me, but it still held, interestingly enough. Let's look at the weekly. And again, you're still above this kind of trend, this kind of bunching up consolidation here. 9170 would be nice. I don't think we get there. But again, if that does hit, I mean, you almost have to. I mean, I put a gun, I have to buy Google. This is GOOGL. Let's do Goog. There you go. 97.79 would be a level that I'm looking for. And you can see that breakdown. But again, now we're bouncing a couple of cents above. So I do like Google. That's something I want to own more of. Anything you recommend that you read on the daily? If you're talking about like newspapers or information, first thing I do when I wake up, I turn on my Bloomberg terminal. And again, interesting enough, I love Bloomberg. There's the terminal. Check that out. Let's see if I can see myself talking about it. Here's the Bloomberg Terminal app. So I get all the news, I get direct messages and everything, direct news reports. So that's probably the one I spend the most on. It's $26,000 a year. You don't need to do that unless you do this every day. Bloomberg, I read daily. Twitter for all the news. Obviously, I follow a lot of news people. And I read the Wall Street Journal and CNBC pretty much every day. Wall Street Journal, I kind of skip the opinion side. I kind of stick to the news. Same with CNBC. CNBC can be a little more, sensationalist at times, which is fair. I mean, they're a news organization. They have to get clicks. But again, CNBC is pretty much on point. I watch them on TV, and Bloomberg. I think those three are fine. Those are the ones that I like to read every day. I read the newspaper too. I read Drudge Report. I read the New York Times. I read the Washington Post. I pretty much read those pretty much every day. I like to be informed, not inundated, but informed. There's a difference. Inundated is the world's always messed up. We're all screwed, and you're just in fear and panic and resentment every single day that doesn't go something that doesn't go your way politically. But I think that it's good to be informed to understand why things happen the way they do, what's happening in the world. That's important, obviously. But to just be constantly put in bad news, murder here and war here. I don't think that's really helpful to a trader's mindset or investor's mindset. This is hard enough. So again, I try to stay focused on what's important, on the things I can control. What can I control today? Trades. I can control where my capital is going, obviously, but everything else, I try not to kind of rot my brain with that personally. And then I do read Bleacher Report. I gotta have some sports, man. I gotta have some sports. SPY gap to the upside. There is no gap this morning, but let's go ahead and take a look at SPY together. We'll go and bring up the daily and see if there's anything that we can play here. And you could see this dotted line. That was previous resistance where we had that nice breakout to the upside where I was short, and I hate myself for it. But we're right now near 390. There is a gap to fill to the downside, guys, right around 379.17, and another gap here. So you're really much in the no man's land. If they cannot hold this higher, you're going to start getting below 3,900 and then possibly get to the level that I was looking for last week, gun to my head, but that's where we are. And that's the most frustrating part. I knew we were going to go down, but I was too early. And it happens, guys. It happens to the best of us. The most important thing is you move forward and see what else you can do. Let's see. Nvidia looks good for long term. I do own Nvidia long term. Let's take a look at it. Nvidia here on the daily. Again, a complete breakdown. And there is an analogy that shows that it's very similar to Cisco back in 2000. The key level here for me is 120. I will be buying Nvidia at 120. Let's see if we get there. The only thing I worry about is that we don't. That's the only thing. 3,500 was my support, if you guys remember, on the S&P, where I wanted to get there, and we never did. Then I moved it up to 3,900 as we started getting a little bit of a bull run. Things were improving, at least on the inflation side. But again, every day is a new market. Let's move forward. Let's get it. You're only as good as your last trade, and right now I am not good, so I need to get better. Let's do it together. Have a great rest of your morning. I will catch you guys tomorrow for the morning note. Cheers, guys.